Good morning, everyone. Well, we had three major news items: the UK election, Comey's testimony, and the ECB meeting on interest rates. And ahead of those items, markets were a bit tepid. There was some mild fear, and they indeed did pause earlier this week, in part to digest the sharp gains of the prior week. But some excellent stocks I wanted to mention here came into buying positions, and we pointed these out in our focus list review, such as BZUN, Balzun. That is a stock which touched its 20-day exponential on Monday and Tuesday, and then it vaulted higher. And then you also had Light, which touched its 10-day moving average. And that was on Monday and Tuesday. So in other words, you had a couple days to buy this thing, and then it vaulted higher by I think like 10%, almost 10%. COHR is another one that had touched its 10-day on Tuesday. So these periods of momentary weakness are excellent buy opportunities because these stocks go right back to support. And where you can pick up some shares, and then you're in the money very quickly, which is nice about this kind of environment. But you want to also notice that these three major news items, and that was together with the concern that markets have gotten ahead of themselves based on last week's sharp upside action. So on Monday, you may have weighed all that in Monday and Tuesday, and may have caused you not to want to buy any of these stocks on weakness. You might have thought that the weakness is going to get more pronounced, and so you're going to hold off. But the windows of opportunity to get into these names is very, very brief, because when they go back to support, they often trigger higher. That can happen within an hour or less. And also the other factor is that the major averages did pause on Monday and Tuesday. Only mildly so, but again, it could have struck. It could have been the reason you didn't want to pull the trigger. And it's very easy, I'm sure many of you know, to talk yourself out of not buying a stock when there's worry on the horizon. The three major news items that came yesterday, and it's a great illustration of how markets often climb that wall of worry, and it's a great real-time illustration. So for those of you who were able to pick up shares in any or all of these, congratulations. And if you didn't, then it's a great learning experience to understand that don't let the news derail you. Focus on the price volume action of the stocks you're looking at. As far as the news items, we all know that the UK Prime Minister Theresa May, she has the Conservative Party over there, and they lost their parliamentary majority. And that did come as a surprise. So now we have a hung parliament, and that just means simply that the odds of the UK leaving the EU are diminished now, and Brexit, in other words, could be revoked, or a new referendum vote could occur. And much as this news was bearish, caused a gap down in June of last year, this news, I guess, you could interpret it as bullish for markets. I mentioned in today's P&P how these corrections, these one-day wonder corrections, are also illustrative of the wall of worry. On March 21st, there's one of two examples that have occurred since the elections. The Trump health care bill was rejected, so markets did an about-face, and you can see that that looked pretty bad on the chart. You had an outside reversal on the NASDAQ on very high volume, above average high volume. So, and of course, major leading names got hit very hard on that day. But you'll notice that the markets found their floor very quickly. I mean, just the next day they were, the next few days they went sideways, and on the NASDAQ, and then, in other words, found their footing, and then we were off to the races again. So that's a good point where you could look for undercut and rally type formations. Over the ensuing days, you could look for voodoo setups. We pointed out some of these such setups in our reports that we've sent to members. And another example was on, I think it was, oh yeah, March 17th. That was the impeachment news. Sorry, May 17th was the impeachment news, and that caused a gap down, a sharp downside move in all the averages. The problem with, or the challenge rather, is that right after that news hit, the markets were off to the races again, and you can see that the averages were bouncing on lower volume. So you could make a dead cat bounce argument that we're going to roll back over again, but lo and behold, markets hit new highs just a few days later. That, again, it makes psychologically a very challenging environment to just be able to, use that kind of weakness in the markets to go in. But the nice thing about buying stocks at their support points is if you're wrong, then you exit at a very tight stop. Maybe you have a 2% stop loss in any of those names I mentioned, Visa and Light, COHR, there have been others as well. So you can keep your, what's a 2% loss? It's pretty minimal. And then in all of these cases, actually, you would not have been stopped out, which is a nice thing about this market. But one of the things that's helping prop this market higher are not just Trump's pro-economic policies, but I think the QE factor, and I've written about that a number of times, it remains at full tilt. And that's due to global central banks such as the ECB, which, by the way, indicated yesterday that it had no plans to further reduce rates. But that doesn't say anything about their current flow of QE, which remains at full mast. And not only that, the Bank of England and the Bank of Japan also continue to print at full speed. So that effectively, it artificially boosts the asset prices across the board, while economic growth continues to languish. And that suggests a QE-motivated bubble, which we've discussed many times. And you also notice if you look at the CRB index, the basket of commodities that are tracked, that seems to be rolling over again along with oil, and that suggests a lack of demand that's going on. And we've seen evidence that the GDP here in the U.S. Continues to be unwell. It's slowing down, and if the Fed, if we were at, if interest rates were at like 4% or 5%, then the Fed would have a lot of room to lower rates, and I think that would be their position right now, is to lower rates, not to get more aggressive in tightening. But again, they don't really have a choice, and I think the end point to this policy of theirs is going to have a nasty implication down the line.
Hey, Dr. K.
Yeah.
Are you watching the market here? The NASDAQ is down 8, and you're seeing all of these big stock NASDAQ names rolling over. Priceline, Tesla, Amazon, Baidu is already, well, that's already been hit. NVIDIA reversed big time after opening up at like 163. And I think this is an interesting divergence here. And we were talking about this earlier before the webinar, that you're concerned that we could see a spin out in the market. But this could be a warning sign here. I'm just noticing this with a lot of these names starting to peel off like this, which is kind of odd, especially on a day where the market seems to be exhibiting so much strength. But it looks like it's primarily in financials where you're getting that. I'm seeing a number of Chinese names also rolling over pretty hard. So I don't know. I mean, you can continue, but I'll build on this concept.
Yeah, no, it's actually it's funny that it's happened very, very quickly here, and these things, markets can change on a dime, and I'm noticing that FANG stocks, the leading juggernaut tech stocks, are getting clipped pretty hard. And, if you look at the NASDAQ, it's certainly weaker than the S&P. It sold off harder than the S&P 500, which seems to be resisting the sell-off. Part of the reason is that the XLF, which tracks financials, is leading the pack again today because of that the news that the Dodd-Frank looks like the House has enough votes to repeal that, which is really good for financials. Could be argued that's really good for the markets as well. But nevertheless, this is an interesting turn. events. It is a yellow flag, I would call it.
Yeah, and
Again,
I don't know about it being a rotation. Somebody's saying, well, this is a rotation into materials and industrials. I don't know if I would necessarily just sit there and pretend all is fine, because I'm looking at some of these names, and yeah, they've rallied because Trump was talking about some infrastructure baloney the other day, and some of them are starting to peel in on an intraday basis. But I just watch your stops, and I wouldn't assume that the market is just fine and that we're just going to rotate somewhere else. I think the fact that we've been in these big stock NASDAQ names for a while and they've been driving this rally for a long time, and they start to roll over, that could be a cautionary sign. And that's usually what is a cautionary sign in the market, an assumption that you're just going to rotate, go ahead and buy materials then and buy industrials, buy CAT. Like I'm looking, sorry to interrupt you, by the way, but I think this is kind of pressing right now. I mean, yeah, you see Martin Marietta materials popping, you had a pocket pivot and you're coming up. Yeah, it could also stall and roll over. Here's CAT, but I don't know. I'd be wary here and just stick to your stops, but I would not assume that everything is fine and that you should be loading up on stocks that are extended. So anyways, go ahead.
Yeah, and the other thing also is that the VIX is pretty much at all-time lows here. It's just scraping the all-time low hit. I think it was set like 20 some years ago. Because we're at, what is the VIX at, 9.54, and the all-time low is 9.31 set in 1993. And then it set a second all-time low of 9.39 in 2006. Of course, that, we've talked about this. This is not a reason that the markets need to sell off. In fact, it's a very weak reason, because if the markets continue to trend with this QE that keeps churning into the system, then it's very possible that the new range of trade for the VIX might be, say, 8 to 9 or 9 to 10. So it's not a very reliable indicator in that sense of trying to call a market top. But more reliable, of course, is price volume action, and it's interesting that the comps are getting hit harder. So yeah, watch your stocks, but also watch the leading stocks, these tech juggernauts, the FANG stocks, etc., because they're issuing a yellow flag here of some sort. There were a couple names.
Look at this move in NVIDIA today. I mean, it's extended, but look at that reversal, and that may turn into a full-blown outside reversal. So I don't know, if you're going to be able to run into stuff like CAT up here and Martin Marietta Materials and Citigroup, which is pushing pretty high, and you're going to be fine up here, but they're up already. So I don't know, but I'd just be watching this closely. My inclination when I see this is to, if I've got anything that's up strong, I'm just selling into strength. And I'm noticing, like, look at this, AAOI is coming in hard. Light was up big this morning. It was up a couple of bucks, and now it's reversing. I mean, I'm just looking across the board. The Chinese names, JD was looking hot yesterday. It was up with BABA, and it's getting tagged. Momo is it's testing the 50-day line, so it looks like it might start to break that. What else? Just go down the line here. I mean, I don't know. I'm in cash. I just sold out everything I had that was up, just bailed out. And look at Baozun getting tagged. That's getting hit off the peak hard. So I don't know.
Yeah,
Be careful.
That's the thing, is it's a question also your time frame. We were talking about this before the broadcast, that you got to define your time frame, because some people are going to have longer time frames than others. There's nothing wrong with that. You just have to know how to work within your time frame. A lot of people would say, well, this has happened. These kinds of warnings, yellow flags and whatnot, have happened many times since the elections, but you'll notice that the market uptrend has been generally, it's been generally up. So you might have a longer term time frame, and that would work obviously in this kind of environment, but obviously also know where your exit points are regardless of your time frame. And the more swing traded oriented you are, the shorter your time frame. If you're day traded oriented, then of course even shorter. Yeah, it's just a question of understanding your style, which is key. But yeah,
my style is to not lose money, so I'm not going to sit in the face of something and say, oh, my time frame is 6 months and watch things go down. So I'm not I'm not sitting around right now. That's all I have to say. So if people want to sit around and think that they're going to rotate into other areas, go for it. But I don't know. I think right now you can back off and just see where things go from here, because I think this looks cautionary. Look at the NASDAQ now. We're down 25 on the NASDAQ. NDX is down 48, so they're pounding those names. If you start to see the S&P and the Dow reverse here, then you got some problems. Somebody's asking what an outside reversal is. Basically, well, you must be really new, because if you don't know what an outside reversal is, then you probably haven't been around very much. But it's basically this idea. Sorry to interrupt again, Dr. K. It's if you've got a stock that, okay, notice how NVIDIA here is up here. If it reverses and goes below yesterday's intraday low, so below here, and it opened up, so that, and it goes like this, that's an outside reversal, because this bar is outside this one. Okay, I mean, I'm sure most of you know that, but that's something to keep an eye on. Anyways, I just see things getting worse here. I don't know. I'm just happy to be in cash. So.
Because the divergence of note. The comps are down -4, -0.4, and the SP is up 0.3. So it's just it's interesting, just to say the least. Just make sure your stops are intact. Yeah, we're talking about stocks already. We just go right into that. I mean, I was going to just mention that there were a couple stocks like Box that gained support at its 20-day after undercutting the low of its gap-up day. So if you sold on the basis of that undercut, which would be understandable, you could have bought that one back. And the same goes for CC, which violated its 50-day earlier this week, and then it traded quietly, closing just above its 50-day yesterday. Oh yeah, just on BABA yesterday when it gapped higher, if you look at the intraday chart, the 5-minute chart, it could have been bought for those who are watching the market stocks during the day. It could have been bought around 137 using the MACD crossover that happened at 8:05 a.m. You can see it on the chart.
Here, let me pull this up. Let me pull this up. Actually, yeah, this was interesting yesterday because it was a short. You could have shorted it in the morning, if you guys can see it here. See, now you're seeing the Dow's coming in, the S&P's coming in, the NASDAQ is getting worse. Anyways, but you can see this. Right here's your 620 sell signal around 140, and you could have shorted that, but notice how you get the MACD stretch and cross right here. So you would cover, and then you get a buy signal here, and you could have gone long. Also, if you're not inclined to short something like this, this does give you an indication of where you might be able to find a bottom. Once you get the MACD stretch and cross, then you can get an idea that this was the low. What was this low here, Dr. 135 or something?
Something like that, yeah. So, you were buying it back at like, not back, but you were buying it at about 130, 137. Yeah. And then it further stretched at 8:10 a.m. So you had, another 5 minutes, 10 minutes to put the position in. And then you use the low of yesterday's gap as your selling guide today.
Yeah, but notice also if you look at the daily chart here, BABA is reversing off the highs. So Dow's up 93 and coming in. The S&P just dropped below +7. I wouldn't be surprised if we reverse big time here. I really wouldn't. So, and I know, Scotty, you're all hot for rotation into healthcare and energy, but you can go for it. So if you want, but then you're a broker, so you have to sit there. Frac is I don't know. This doesn't look so hot. I mean, I thought this, if the oils turn, this might have a shot at turning, but I don't know. It's an IPO, but it's basically what it is. It's a reiteration or resurrection of the old Keene Group, which was an oil services company, and now they're fracking services company. So, anyways, you want to go through the focus list, Dr. K?
Wait 1 second. I'm just in the middle of a trade here. I need to dump
bail, baby. Put that parachute on and jump.
Yeah. Well, when the stop hits, it hits.
I mean, look at everything's coming in. It's all coming in hard now, and I'm not going to sit there. I mean, look at it. Double AOI. I was long that this morning. It started coming. I just dumped it, and now I'm glad I did because I'd be down another $2. Yeah, I want to sit through that, especially when they're extended. Oh, we'll just rotate into new areas. No problem. Yeah, right.
Yeah. The thing is, if you've got a longer term time frame, and the key is here is if you're
Screw a
sitting on a
long-term
profit,
time frame. Long-term
if
time
you got
frames are for losers.
if you got a profit cushion, and and again, some people are because of a longer time frame, they have their trophies. They're up 50%, 40%, whatever in their names because they got they're using longer term moving averages. So if you got that profit cushion, you're willing to sit through a what could turn out to be nothing, but it could also turn out to be something more. Always know your sell stop. Always
I
know
don't
your
know.
exit point.
It looks
Because
cautionary to
the
me.
number one rule is don't lose money, and well, the number one rules are don't lose money and manage your risk, whatever your time frame.
Anyways, what's he saying here? Oh, Scotty's getting contentious here. He says, wrong, clients up 13% year to date. Yeah, but you'll sit there long enough so that they'll eventually be down 13% if we get into a bear market. So hopefully, though, you'll be able to get out in time. And then he said, don't take a bullish or bear. I said, no, not at all. I'm just going with the information I see in real time. And what I see in real time is a divergence, a heavy-duty divergence in the NASDAQ, which is down 24. And a lot of these big stock NASDAQ names are rolling over. And that's what I see in real time. So I'm reacting to real-time information. I'm not operating on the basis of a bullish or bearish stance because, frankly, this morning coming in, I was very bullish. And then I see what's happening, and I respond to it, And a lot of the names I was long this morning, I dumped, and they're getting handled. Look at Light. I mean, that was one, and look at it now. I mean, that's working on an outside reversal. So don't sit there and tell me that, I'm sitting here with a bullish or bearish sense. I'm responding to what I'm seeing in real time, and let's get real here. The indexes are up there, and they could have a correction. Now, is this going to turn into a full-blown correction, or is this another pullback like this? I don't know, but I'd rather have some cash in my pocket waiting to see how things come in. So
yeah, just keep in mind that the time frames vary depending on the person. Gil's time frames is very short. He's very quick on the trigger. That's the style that works
I
for
sell into extended strength. In this market, that's often been the thing to do, and I don't want to lose money when I do because I certainly don't want to be caught in a day like we had on May 17th. I don't want to be caught on a day like that because you're down. Those stocks were down big on that day. And at least if I have some cash, I can think about it rationally and unemotionally. And in fact, if for those of you who follow me on Twitter, I was saying watch out for some undercut and rally type moves that might set up here. The Dow's up 79 and we're starting to come in fast. So don't be surprised if we reverse. So remember, timestamp that, please. But
right. That someone would also, that works for your style. Because
no, my style is the only style that works. It's the only. Everybody should do my style.
Yeah, no, that's what someone was saying.
Hey, I want to. Right. I'm just saying, I'm going to be adamant here, and I'm just saying, if you've got profits and you have extended upside in some of your stocks, you can think about lightening up. And it looks like Scotty did lighten up. So yeah, so he's one of my proteges. And not only that, another vodka aficionado. So Scotty knows what to do. So anyway, so those of you who wonder who Scotty is, just so you know, he's someone I met at the HGS investor conferences, and we become friends. And he sends me vodka, and I give him model books, and it's a great relationship. Okay, see, I just bought. I bought 35,000 shares of the UVXY at 10.02. Now we're at 10.23. So. And now the Dow's up 75. Anyways, you can go on and on if you want, Dr. K, about your time frame this, your time for that. I'm just saying right now, this looks like it could be trouble. So, anyways.
Right, but someone pointed out like there's so many knee-jerk reactions along the way, in this uptrend, and the sky's falling, but run to cash, run to cash. And my point to them was, well, if your stocks are extended to the upside, take your profits, or if your stops are hit, take your profits. But outside of that, you have your time frame, whatever your time frame is. And some people use longer time frames. Some people use a 50-day, and some people can't look at their stocks during the day, and so they kind of have to use a longer time frame. But I pointed out that with these moving averages, you can actually put in buy limit orders and things like that if you're not around during the day, so that if those prices are hit, you're going to be in stock. When the stock touches down to its 10 or 20 day, it's great because then you come back after work and you see that you've positioned in the stock, and the stock might have actually closed higher on the day after pulling back to that weakness. So, it's an opportunity for anyone, even if they can't be, sitting in front of their screens all day long, because these patterns are very, they're quite predictable in terms of, if you're in a high quality stock, and look at our focus list, they represent a lot of high quality names, leading names, and they pull back to logical points of support, and then they rinse and repeat. They bounce, and then you're sitting on a profit.
I think we should go through the focus list here and just kind of see where things are at in real time. What do you say?
Yeah, sure.
Okay. Well, first of all, we got BABA, and that had a nice Bible gap up, but now you're reversing up the highs, which is, I'm going to say is not necessarily anything to get worried about. So if you're long it, you're okay. I mean, your maximum downside stop, I think, would be the low here on the Bible gap up, and if you own it from down here, I mean, we've been talking about this one since down here, actually lower. I think down was closer to 100 on the century mark breakout, but it wasn't the first time, so it didn't really count. But it just trundled higher. Notice how it just goes real slow. But we talked about this. Remember the big shakeout? And this is the kind of thing that if I'm in cash, I can look at this rationally, and what I see at the time is it's undercutting these lows. So it's undercutting rally. You just hit it right there on the 620 when you get a buy signal or a MACD stretch and cross, and then boom, boom, things up, and then it goes real tight. But the shakeout sets up further upside, and we've been talking about buying this thing along the 10-day for, I don't know, the last 2, 3, 4 weeks. And now you get the big gap up. So I don't know if it's an exhaustion gap up or the start of a glorious new uptrend to 200. Who knows? We'll see. I think it's going to depend on the market. But if you're long it and you bought it down here, and I know people who've actually been built, don't you have a position that you started building down here, Dr. K, in this still? Or did you dump it?
No, I got rid of it.
Yeah, see, it bored you to death, right?
Well, it's too slow, and they were faster names.
It's too slow.
I like fast names. That's more of my style.
Yeah.
But that's the thing. You can get these surprise gap ups higher, and then, like I pointed out yesterday, you could have bought into the intraday action on BABA.
Yeah. So, anyways, but so that's where that one is. Somebody's saying, "Goofy guy's making me nice dollars." Is that us? Are we making you nice dollars, Joe? Is that what you're saying? I hope so. Let's see, Amazon coming off. Now it's below the $1,000 millennium mark, so that could be a millennium mark short. I don't know, but it's peeling over. But that's or rolling over rather, peeling off of the highs here. I don't know if that's necessarily an issue, but we'll find out, won't we? Applied Opto this is one that I had earlier. Now it's down $3. I mean, I thought it was buyable at the 10-day line. It went right through, so I'm just gone. And it's just going lower. Maybe it goes to the 20-day exponential. But on the other hand, the thing is, it's had this big move. So it could, pull back even into the 50-day line or something. You don't know. And I'm not going to sit through that. I'm sorry, but I'm not going to sit through it. Because if I'm long the thing, I'm long heavy. So anyways, next.
Well, actually, no one should, just for instructive purposes here, that no one should sit through that kind of a pullback if you don't have profit cushion.
Yeah,
I mean, exactly. In this case, I don't see a legitimate. If you bought it, say, on the 5th of May, and you have a longer-term orientation, I still would be reluctant to let it go all the way back to the 50-day. Well, the 50-day is probably going to catch up to the price at some point. And
yeah, I would use a 20-day exponential.
It could redeem itself. It could actually be viable for 20. We don't know, but for those with longer-term orientations, it can work to your advantage, especially with stocks like NVIDIA, where you can then, sit pretty for a number of weeks, if not months. And I don't know, AAOI, in the prior run-up, it had a sharp run-up. It obeyed the 20-day from, what was that, from 25 all the way up to 60. So that's pretty good. So, yeah, if you've got this orientation, maybe using the 20-day as your selling guide on this one, that's okay. It's done it before, and right now it still looks like it's a viable company in terms of leadership qualities, presuming that the markets can maintain themselves.
Let's see, the Nasdaq. What's the low here? What is that? 62.81 or something like that? Who knows? Let's
62.86.
62.86. So if it moves below 62.86, that would be an outside reversal. And that would probably be kind of bearish in the short term, I suppose. But I don't know. I'm just, just watch the stocks, and I think everything is starting to come in pretty hard. So I'm not, I'm not going to be sanguine about this. Somebody says, really appreciate the. Go ahead.
This could also be one of those algos you see many times, like often in the first hour, you know, the markets sell off really hard, and it scares people out of their positions, and then they find their floor and then rally the rest of the day. And there's some kind of algo activity, because that pattern, that kind of market action continues to repeat over and over again. So, you know, that anything's possible, but you got to just maintain those first two rules. Don't lose money, and risk management. Those are your keys.
Yeah.
And your
Meanwhile, everything's coming down. It's continuing to come down. The NASDAQ is now at new lows for the day. Somebody says, really appreciate the honesty of the real-time feedback. Yeah, we're not here to bullshit you. So, and then they say, I felt the same way, but have been wrong so many times earlier this year. This morning, a nice gain turned to a loss. That felt wrong. And the leaders, NVIDIA Lite, AAR, were the tell. Yeah, same for me. And so that, you know, and I'm gone. And yeah, I can jump back in if I want to, but I'm glad I sold, because I could be down pretty good. And you know, I got to tell you guys, this hasn't been exactly the greatest week. In fact, for me, I came in over the weekend. I came in heavy long Snap because it looked great. Right here, remember I mean, this is almost textbook. It's just real tight in here, and the volume's drying up to Voodoo Loves it. But as soon as it broke, it gapped through the 20-day moving average on Monday, boom, I sold it. I did not sit there. I don't sit there at all. You know, I'm not going to say, oh, we'll just wait and see if it comes. Or maybe the algos are just selling it. You know, maybe a consortium of grandmothers are selling their Snap. I'm not into that. I just unload it, and I'm glad I did, because this thing's getting pummeled. Now, I had a big position in Twitter. And I just want to put this out there because, you know, I don't do everything right all the time, and I screw up a lot too. So if you screw up, you know, don't feel bad. I've seen Bill O'Neill screw up really badly. So, I mean, I remember the time, and I think this was 98, and we were working Schwab, and I was heavy in Schwab, and one day it pulled back $5. And I'm sitting there buying it, and they're telling me on our desk that, oh, you're buying it from somebody in-house. And that would happen, right, Dr. K? Sometimes you'd be buying something, and somebody, sure, another portfolio manager in the group would be taking the other side of your trade. So I can remember buying Amazon from Scott O'Neill in 2003 at like $26 or something. Then it went to 60. And then later on in the day, on that same day, Bill comes into my office, and he's actually sweating. He's got sweat on his forehead. And he like grabs one of the tissues I had in a tissue box and wipes his forehead. And he says, man, that Schwab. And the stock actually shook out, and it ended up down like $1, I think, on the day. And he's telling me, yeah, I was dumping this early today. I had to cut back because I had so much of it. And I said, oh, I was buying it from you then, because they told me I was buying it from somebody in-house, and that must have been you. And Bill looks at me, and he just starts laughing, because the way we looked at it, we were all working together, and so Bill was happy that the stock he was dumping, I was buying, and then the thing ended up going back up. But you know, I was a little bit being lucky there too. But that just shows you, you know, Bill had his moments when he screwed up. I screw up, and not everything goes perfectly all the time. And this week, actually, with Snap and Twitter, and then I had another one, this Nutanix I was in, and this looked beautiful just 3 days ago, and I loaded up on it right here, and I noticed yesterday morning it just starts crashing through the 10-day, and then as soon as it goes to the 20-day, I sell it, and you can see here that it just crashed, and I'm watching this thing, so I just unload it, and I watch it go down, and I'm thinking, wow, I'm glad I got rid of that. And of course, it rallies all the way back up to where I sold it just to piss me off. I think it's actually 5, 6, 7 cents higher, and then it hangs at the 20-day line. Now it's probably going to roll over. Dow's up 66, S&P up 3.92. We were up 7.8 when we started this webinar. Dow was up 104 when we started this webinar. Just for reference purposes. Let's see. Anyways, but so you know, this has actually been a tough week for me, and sometimes that'll tell me maybe things are getting a little bit stretched, and I've been too lucky for too long. You know. Go ahead.
Interestingly, the volume, something's going on, because the volume on the New York is -6% at this time.
Yeah.
However, the volume on the NASDAQ is plus 48%. So
right?
they're
Yes,
I don't.
Well, they're dumping the big NASDAQ leaders, and I don't know what that means, but that seems to me that's the first step to just exiting the market. If everything goes red, all hell will break loose. That's what I think. I mean, I could be full of crap, I know, but that's what I'm thinking, and I'm playing it. I dumped my longs. I'm long the UVXY at 10:02. So there you go. Any other questions? Let's see what we got here. What time is it? 9:37. This is a lively session. Scotty says, I like to look for the BFPP situations, not the extended names. Good man, so do I. I think that's some of your lower risk situations. And I know, Scotty, you've been long the sedge since it had the BFPP down here, I believe. And this thing keeps going. It had another pocket pivot yesterday. But I wouldn't be sitting here with it right now. So Dow's up 61. Are we at the lows in the day? Yeah, we're breaking
Yeah,
the lows of the
NASDAQ we are.
Yeah,
We're right at
down 39. Now that's getting worse and worse. I think you got a problem. So, and you know, with all this Comey stuff and the British election and blah blah blah, everything out of the way, I think that now the market's going to be focused on Trump's agenda, and I think they're moving too slow. I think he talks too much. Personally, I mean, I personally think he's probably the best choice out of the ones that were running in terms of being anti-establishment and against the whole government, the entrenched ruling class in Washington that perpetuates itself and keeps its cushy, wonderful lifestyle. You ever, like I was talking about this last week, you ever wonder how these people get $100 million net worths after 30 years in Congress when they're paid, what, $140,000, $160,000 a year? I don't know. Anyways, okay, we were going through the focus list here. Let's see, Baozun. It's still going down. So I don't know. Watch, this may just reverse and be done. Let's look at Box. I actually had some of this morning. It looked like it was acting okay. It was actually a buy off of the 20-day exponential yesterday. That was your best spot to enter, but and it's because it filled the gap here, and it was right at the 20-day line. So to me, that was the best spot. And you got a little bounce, but it seems to be giving it up. And we were talking about this morning. Maybe the earnings aren't good enough. Who knows? I don't know. Let's see, S&P up 3 now, so it's cut its gains today by more than half. Anyways, how about whoops, CC? That's hanging in there. This is a materials name, I guess, chemical stock. But again, you bounce off of the lows, and if it rolls back to the 50-day, it might be a problem. If I bought it down here, I would probably be selling it. That's just me, because I could always buy it back if I wanted to. That's the beautiful thing about stocks, and most people don't seem to know that if you sell a stock this morning, you can actually buy it back later in the day. It's allowed, It's not like a piece of real estate. Look at Trivago. That was a great mover for me, and look, it's flat.
The only thing that stops someone from buying it back is their own psychology.
Exactly.
And the market doesn't care. The market doesn't care if you owned it before or not. I mean, it's a tendency that if you bought a stock and sold it, then you're now biased against that stock.
Right.
Often
you're just playing the price action. You're just playing it in the lowest risk manner you can. Look at Trivago now; it's flat, and we put that on this morning. It looked good. It did look good, But I'm going to tell you a little secret here. The place to buy Trivago was not on this move today, but can anybody see, Scotty? I'm sure you know where this was buyable. First of all, you see the low here, that's 1813. You might notice it undercut that low right there and rallied. It's undercut and rally. 1863 was a good entry for me there, and now it's moved higher. You sell into this when everything starts to look goofy, and we'll see if it comes in and hangs. But it's just the way this market rolls, man. We're still flopping around. I think the financials are holding everything up for now. Coherent made a new high and reversed off the highs. This sort of action, I don't know. This reminds me of March 2000. Everything was running, and then all of a sudden, boom, it just reversed hard. But I don't know. It's not really 1999. It's more like 2017. So who knows? But this looks really weird. And even what you were saying with the volume levels, Dr. K, it's kind of odd.
Yeah, that's really surprising.
But this market, I think, is mostly a big manipulation, a big QE manipulation. You've got, somebody showed me a chart the other day. It's on my Twitter page, if you guys want to check it, of the foreign buying of U.S. assets, and it's just gone straight up. So you know that all this QE that's being printed by the European Bank, Central Bank, and the Bank of Japan, it's all coming into the U.S. market. And can it keep coming in forever? I don't know. Maybe it can. But it does tell you, people say, whoa, this market, nothing can derail this market. Nothing can rattle this market. Well, no. That's because it's got a flood of QE in there keeping it up. But in the process, it creates a huge bubble. And if there's some catalyst that pops that bubble, the bigger the bubble, the bigger the bust. So I don't know. This is a very interesting day. Fascinating, actually. Okay, Dow's trying to recover, up 72 now. S&P coming up off the lows, but you know, just a bounce off the lows. Facebook is an outside reversal. See that? You get you open up, you go up here, and so here's the range from the prior day, and you can see it's now below that, and that's an outside reversal. So you learn something new every day. JD, this looks like crap. I've decided that I'm just going to cuss whenever I want to from now on. I'm not going to try and be civil or polite or anything. I'm just going to be like they are on the floor. So, I mean, the NYSE floor, like I like to tell people, if you think I'm rude and unprofessional and crude and whatever and mean and arrogant, you should go on the NYSE floor back in the day, man. That place was a big World Wrestling Association match with stocks, basically. But look at this thing. Big reversal, breaking down, looking like poop. You gonna buy that? I'm not. It's way up there. I'm not. I would let this thing settle down at best, but it doesn't look so hot.
Well, that's the other thing is you got a lot of volume, downside volume on the NASDAQ. That's institutional volume cuts coming in.
Yeah.
So you don't want to be buying stuff when the market's acting.
We're down 45 on the NASDAQ now. I mean, this is pretty.
You want to look for the floor because at some point, this could be like one of a few dozen times in the past where the market will find its floor again, and that's your opportunity to look for the voodoo setups in the coming days. Or the undercut and rally is really one of the best tools because you don't have to be present. You got to put your stops in. I mean, you put in your buy limit, and if it's triggered, then you're in the position. And you also put in a stop. So in other words, if your limit is triggered, but then it goes lower, then you're at least stopped out, and you know exactly what your loss is going to be for that trade. Those are for the people who aren't sitting in front of their computers.
Light is now an outside reversal. So,
yeah,
okay, watch the stocks. Okay, what are the stocks showing you? I see a lot of outside reversals. I see a lot of crummy action. You got Momo, looks like it's now below the 50-day line, and maybe it's going to break down. Netflix, how's Netflix doing? Oh, look at Netflix cracking off the peak here. Boom, boom, out go the lights. And I don't know, now we're at the 20-day exponential. Is that going to be support? We'll see. But that also doesn't look so hot. NVIDIA, probably an outside reversal by now. Up, getting close, almost. Look at that. Man, that is nasty. Let's see. You guys like that? Look at the volume in that. And, it's got a $185 price target. I think there was 3 brokers that came out yesterday and today and put $180 to $185 price target on the stock. All I want to know is this. Where were these geniuses back here, or even on the Bible gap up when we were first telling you guys it was Bible right there? Where were they? Why do they come in now? The thing's up here, and now they're coming in telling you it's got a price target that's 15 bucks, 10% higher than where it is now. Probably because they got some clients who want to unload it, apparently, because that sure seems to be what's going on today. I don't know. I think a lot of this market, is manipulated. It's an insider's game. You got the big brokers can pull off the carry trade because they've got free money near 0%. And once they figure out that ends, then that's going to. There's now is a big outside reversal. Wow. Snap is off the list now, but we'll just look at it, just getting uglier. Square has been a beautiful stock. I keep thinking someone's going to buy them. That's the way this thing acts. It seems like someone's going to buy them. Man, look at Box now, 1888. That was a stock I was long. Nutanix, 1751. I was buying some of that at around 1780. Light is 6213, down almost $3. AAOI now is down $4. And I was long 7,500 shares of that. If I had sat, it was down $1 on me. If I had sat with that, I'd be down another, $23,000 or something like that. I don't know. That would be no sushi lunch for me today. Let's see. Tesla is looking like an outside reversal. It's holding above the lows right now, but already did, reverse below them. So, that's looking pretty grim. TTD, an outside reversal. You guys see that? Everybody see that? Right there, you can see the, it's now outside the prior day, so looking pretty grim. Isn't this exciting? It's amazing, actually. I mean, everything was looking so good. I was watching Fox earlier today, mainly because now that Bill O'Reilly got canned, and I got to admit, I never really cared for Bill O'Reilly. Dennis Miller, though, used to go on the Bill O'Reilly show, and he's hilarious. And now he comes on Stuart Varney, so I'll put Stuart Varney on in the morning just in case Dennis Miller shows up, because I think he's pretty funny. But let's see. So TTD, Travaga I already showed. That's now minus a penny. And, whoops, TRVG. And they're whacking that thing. So let's see what else. We got Viva. Let's see, what do you think Viva's doing? Probably reversing. Yeah, it's breaking down. I mean, the 63, 64 levels where we'd want to buy this thing, but right now, I think your volume levels are 47.87. No. What's the volume change here? Minus 29.
On V, but that's been picking up. Everything's been picking up on the downside, and you know this thing could easily pull back to its 20-day.
Yeah.
And that can be your entry point for the stock if the markets can settle down. You know, you want to make sure that the freight train isn't full steam ahead.
Is there any news out that's causing the Nasdaq to sell off? No. One of the things that makes me very nervous, well, not nervous, but cautionary and negative on the market short term, at least right now, is the fact that there's no news driving this, and that is a problem. So, anyways.
Right. Well, remember what happened after the close on what was it, May 20th? That futures started trading down aggressively. That was on the, let's see, on the 16th, May 16th, after the market closed. And we were wondering, what's the news? And there was no news out. It's just the futures were aggressively lower. And so obviously, the next day, then the impeachment news came out. But there was obviously information leaks. And
yeah,
such
that was this day, wasn't it?
That was on the 16th, so that was
that's what we noticed.
Right before the big drop. That's it.
Yeah, and I had sold my longs on that day, and I bought a bunch of UVXY, and the next day was a beautiful thing. So I'm going to guess that I don't know. I may hold some position in it over the weekend. I know one thing. I would not be short the VIX right here. I think it's dangerous, because you don't know what this is all about. And this is really weird, And so black swan things, and if you get a black swan sell-off, you could see the VIX up $7-8, in a hurry. And that would be disastrous if you were short the VIX. You could lose your whole account, I think, in a case like that. I don't know. You would know more about that.
Yeah, no, I've looked into all those environments, and they haven't happened yet, but that doesn't mean it can't happen. And that's the whole thing, is that the markets change, and we're in a more volatile, politically volatile year this year. So we're, in other words, these gray swans are popping up more often than not. And
gray swans? Is that a new term, or black swan? Did you mean black swan?
Well, I call them, they're more like gray swans. Black swans really are.
Okay, you made up a new term. We'll have to trademark that. I'll call the patent office right away.
Yeah, there you go. That's kind of the situation that this market is giving us, that we haven't really seen that kind of situation in past years. Yeah. And that's the reason, the VVM was up over 50%. And prior to this year, prior to making it live, it had in real time done very well. Prior to that, good 50% return. I mean, I don't want to give the numbers out because they sound too good, but let's just say it was doing damn good. And then we had a couple of these gray swan things, and when the VIX was down more than it had been in its multi-decade history, I think it was like the third worst day. These are gray swan. I mean, you could call it a black swan environment because that's a very rare event that took place, and the predictive elements, what the markets usually do, like if you look at the prior pullbacks, sharp pullbacks we've had since QE started, there's usually some method of warning in price volume action. And so, for instance, I'll just use the VIX model. It's managed to be on the right side, or at least in cash during such situations. Because the markets have a tendency to do that. Flash crash of 2010. There was a few days of warning. The market direction model was operating, not the VIX at that time, and sure enough, it was on a sell signal, so it captured some really nice gains, especially if you were in a 3x ETF at that point. But then there was other times that the markets have given clues, and you just have to be fast reacting. But this year, we've had, like I mentioned, the 2 days where the markets have been down sharply, and there was really no warning ahead of those days. But I wouldn't call those black swan in terms of the markets, because what the markets were off a couple percent, 2-3%. So black swans are more indicative of a market crash situation.
Yeah, well, that could happen. So I don't know. And Nasdaq now is down. It's found a temporary floor. The market has actually. Dow's now bouncing off the lows, up 87. But I think it's mostly the financials, and probably moving the defensive movement into lower PE stocks. So remember, institutional investors are driven by one motive primarily, and that is not to lose their job. If you're the manager of a big mutual fund or a pension fund, you don't want to get fired. And basically what you have to do is stick to your charter. In other words, what you're allowed to invest in. And then if the market does get in trouble, you want to either match your bogey or beat it. So if you're indexed to the S&P 500, then you want to match that. So what they'll do is they'll move into lower PE names, because if something happens really badly and their fund is down 40, 50, 60%, like that's what happened in 2008, in late 2008. A lot of mutual funds were down over 50% when the market broke. If you can justify what you own by saying, well, I moved from 45 PE stocks to 11 or 12 PE stocks as a defensive measure, well, your board of directors for the fund or the pension fund, whatever it is, they're not going to fire you for that, because you did what was prudent, and the market just did what it was going to do. So they'll rotate, and you're thinking, some of you are thinking that this is constructive rotation into other areas of the market. It could be just a defensive type of rotation, and you really don't know for sure. I don't see that we would have a glorious continuing bull market rotating into industrials and financials while everything else eats doggy doo-doo. So I don't really see that happening. But I guess in this market anything can happen, and it seems like sometimes everything does happen. But in any case, what time is this? 9:54. Did you notice, Dr. Hitt, today that the sun came out this morning?
Yeah, for a change. The June gloom broke the June gloom.
Yeah. That figures. It's the first morning I don't go out running. So I usually take one day off a week, and that was today. And of course, it's the only day that it's not all gray and gloomy out there. I hate that. But the other side of it is, when we're on the coast here in Southern California, inland it could be 95 degrees and we don't even know it. We're staying a nice comfortable 71, 72. So that's sort of the trade-off. But today looks like a nice day. Maybe not for the market, but we'll see what happens. I don't know. I'm just looking at all this. It looks really bad. And we still got, 1 to 3 hours to go. So I don't know. Watch your stocks. If you're starting to break your trailing stop, just bail out and then look to get back in if things stabilize. But the thing is, you are way up there, okay? The market, look at the Nasdaq on the daily chart here. I mean, that's fairly steep, incline, and so things are stretched to the upside. You can come in hard, and I mean, you could have a normal pullback down to the 50-day line, but what is that? 6,300 down to 60.50. What is that, Dr. K? A good 4 or 5%. That could clock a lot of stocks. And today, as you can see, there are a lot of stocks getting clocked. In fact, if I look at my list, there's a lot of things down 3, 4, 5. Some as many as 6 or 7%, like Baozun. Double AOI down 536. So it's not looking so hot. Anyways. Somebody's asking, so how and when would you go about entering into a short trade prudently? Well, I think the first break off the peak, that's not when you start shorting unless you are so prescient that you're able to see everything reverse. Now, if I was smart, what I would have done, the stocks I sold, I would have flipped and gone short if I had really seen what was going on. But I was probably too busy starting this webinar, so he screwed me up again. But that could have been a good way to do it, because I was sort of alert to that yesterday, that we might be getting a little stretched and there's possibility of a reversal, just like we were talking about at the very beginning of this webinar. Dr. K and I were talking about it earlier this morning. So if you're really crafty, you could have shorted this morning. But if you have to ask me how and when would you go about entering into a short trade prudently, you shouldn't be shorting. You need to read up on it. You need to do it yourself. And the other thing is that if we do start into a bear market, that's when you want to be working the short side more, being more focused on the short side, but you'd be looking for stocks breaking down, and that takes a few days at least for things to set up, unless we get this big black swan. Now, if we do, what I find, if I think the indexes are reversing and there's possibility we're going to come in, I'll just buy the UVXY, which I think down at around $10, it's a very low risk trade. I mean, what will you get to? 950 if things flip on you, but you could set a stop 20 cents below where you bought it, and it ain't going to move too much from there, even if the market goes up another 100 points. So if the market breaks down hard, it'll go up $2 or $3 in a hurry. So that's one way I'll try and play the short side off the peak. But in terms of actual stocks, I think let's just take, okay, what becomes your short sell target? That's something like an Nvidia, would it? Well, you're going to short it here? No. What's breaking down? What would be seen to be breaking down? Throw a name at me. A lot of these are still up there in their pattern, so I don't really see any of that as an issue. So, Apple, but Apple is not. It's still up there. Is that break? Are you going to short it here? I guess you could, but it's a little bit too late in my view. And you just want to see. I think once it breaks the 50-day line, then maybe you've got something you can work a little more clearly. But you don't have to short off on the first day off the peak. Short selling is something you want to do during a bear market or a protracted or prolonged correction of 10 to 12%. Okay, and so what happens is they'll first break down and then they'll rally back up into potential areas of resistance. So, Apple could easily just break below this low here and bounce off the 50-day line. Or what happens is it bounces off the 50-day line, and then it rallies weakly into the 20-day line here, and you notice the volume will dry up, and then it rolls over. But that's still something to wait for. And again, I don't think short selling is something that the average investor who doesn't have a lot of experience doing it or hasn't studied up on the topic extensively should really be doing. Because in this market, you get your head handed to you in a hurry. Trust me, I know. Because they'll turn it around, and if you're not quick, just for example, if you thought the market was going to blow to pieces and you start getting heavy short on this day, you would have had your head handed to you on this day. So, and I was short that day, and I covered everything into the close. And then the next morning I was in cash, and I was able to think about, what was going on. So anyways, I don't know. I hope this is all possible. White coffee and retest. And I don't know, Scott, you been drinking vodka again? I'm not touching that thing with a 10-foot pole. To me, it's not whoops, that's not the one. It's not a constructive pattern. The volume, the other thing you're missing entirely is that the volume is already above average today, and it's been that way the last 2 days. You need to see it drying up. Maybe it undercuts this low, and then you get a reaction bounce, possibly, but I'm not going to buy this thing for a long play. This thing looks toasted. I wouldn't be surprised if it goes below 10 if we get into a bear market. But who knows? I don't know what's going on today. We're down 38 in the NASDAQ. The NDX is taking the brunt of it. But I think what do our AD lines look like today, Dr. K? Are they pronounced or profoundly negative?
No, they're positive, which is very strange.
This is very bizarre. Yeah, the NYSE is 19 to 9 positive, and the NASDAQ is 16 to 9. But I think that's all financials. I don't know. This is very, very, very strange. Very strange. I don't know what to make of this. I don't know. I'm just backing away. I got some UVXY. We'll see what happens. It's Friday. Have a martini, relax. Anyways, that's all I've got. You got anything else, Dr. K?
No, good over here.
All right. Well, you guys, good luck today. We'll see what happens. It's a very strange market. So, and now notice BABA up 58 cents. So it's given up most of its gains. So, maybe it's a weird rotation because stocks are the new bonds, right? I don't know. But this looks like trouble. So I would be cautious and just stick to your trailing stops. If it's a 10-day, 20-day, 50-day, whatever, that'll force you out if things get really worse if you have a longer-term time frame. But, when things get extended, I think you can save yourself a good 5 to 10% off the peak if you're quicker selling into strength. But very strange day. So we'll just see how it ends up. And, either way, I don't plan on doing anything other than holding this UVXY, assuming it even works. which it looks like it's trying to, but we'll see. In the meantime, I don't own any stocks. Do you, Dr. K?
No, I'm just in the middle of something here. I mean, I got to do another
All right.
trade.
Well, that's all we got, you guys. Have a great weekend. We'll catch you next week. And, stay alert and stick to your trailing stops and watch out. Take care.